Yes, hello, my good subscribers and professionals in various fields, and more so in the accounting field. So I take this opportunity to thank God for making us achieve great in the year 2022. We are closing this year and try to take your minute, thank God for the gift of life, and ask whatever you need in the coming year. So for the accounting students, remember that. In the year 2023, we'll be starting a new semester on 3rd. That is next week, Tuesday. That is from 3rd. So you are welcome to join so that we can start the preparations of the semester and we do great so that you can be able to do your exams coming April with ease. So again, I repeat that I thank God for the gift of life in the year 2022. So before we call it a session for today, so I would like to look at a small area in our previous sitting, that is for the December exams, that is financial reporting and analysis, consolidation question, the consolidation question, I think it was question 3, so that we can be able to tackle and check what the examiner was required. And this one can be a measure or it can be as a sample of what we do in our live classes, which I would be starting on 3rd. So guys, CPA students, welcome to the live class. So let's do this question so that you can be able to have a good experience of what is required or what we do in that live classes. So I would like to read this question from my end as I interpret so that I can be able to tackle it. So the question reads, that is December 2022, question 3. They were saying that on 1st January 2022, H Limited acquired 80% of the 4 million shillings 10 ordinary shares of shillings, that is of S Limited at a par value. So parent is H, it has acquired another company, S, up to 80%, meaning that that is a subsidiary. A subsidiary is a company which is acquired at a percentage exceeding 50. That is 50 plus 1. So the acquisition consideration comprised new ordinary shares issued by H Limited in an exchange for every 5 acquired in S. Additionally, H will pay further consideration on 31st December 2022 of shillings 11 per share acquired. So H Limited cost of capital is 10% per annum and the discount factor at 10% for 1 year is 0.901. So remember that when a parent company acquires another investee company, it has to pay what we call a purchase consideration. So here the purchase consideration was in 2 ways. So we'll be able to compute that when doing goodwill. We need to know the purchase consideration so that we deduct the net assets. So as at the continuation, as at the date of acquisition, the fair value of ordinary shares in H and S were shillings 15 and shillings 12 respectively. The following statement of profit and loss for the year ended 30th September 2022 relates to the two companies. So you have a statement there. And for the guys who don't have this question, I will be able to attach the link down there under this video. You will be able to find that link which will direct you to where this question is. So whichever way, you will be able to get it. So you have the statement given, statement of profit and loss, then additional information, they said, as at the date, that is additional information number 1. As at the date of acquisition, the fair value of S Limited's net asset approximated their carrying value with the exemption of an item of plant which had a fair value of 24 million above the carrying amount. The remaining economic useful life of the plant and equipment as at the date of acquisition was 6 years. Depreciation is charged to the cost of sales. when they talk about assets and they're talking about an item of plant, that is an asset to say. An item of plant had a fair value of 24 million above the carrying amount. What they imply there is that there's an aspect of revaluation gain when the carrying amount of an asset is higher than the not carrying amount, when the fair value is higher than the carrying amount, or when the carrying amount is below the fair value. So what they are trying to talk about is something called revaluation gain. So meaning that this asset has increased in value with this 24 million. So this 24 million has not been subjected to any depreciation. That is why they go ahead to give you a useful life so that you determine the depreciation inside the revaluation, which we call revaluation gain. Number two, sales from S Limited to H in the post-acquisition period amounted to 30 million. S Limited reported profit margin of 25% on these sales. H Limited's inventory include 1/5 of the goods as at 30th September 2022. Here there were goods sold by S to H. But when S was selling, he made a profit. But H receiving them, by the end of the year, he never resold them. He sold a certain fraction, and a certain fraction was remaining in his stock by the end of the year. That is, 1/5 of the goods are unsold by the end of the year. So the goods which are unsold by the end of the year, they imply that inside those goods there is something called unrealized profit. There's unrealized profit. Number three, H Limited policies to value non-controlling interest at fair value as at the date of acquisition. For this purpose, S Limited's share price as at acquisition date can be deemed to be representative of the fair value of the shares held by the non-controlling interest. When you want to know which method to use when computing for the goodwill, we always say that goodwill is computed either using full method or partial method. That is when we are talking about a subsidiary company. When the parent wants to compute for the goodwill of a subsidiary company, it can compute for that goodwill either using full method or partial method. For the parent to use full method, the minority shareholders, the NCI, non-controlling interest, must be stated at its fair value, or you might be provided with the market price of the ordinary shares of the subsidiary, which will aid you in the determination of the fair value of the NCI. That is what they provided in Note 3. Note 4, H Limited's investment income, the one which is in the statement of profit and loss, that is, H Limited's investment income is dividend received from its investment in a 40% owned associate, which was held for several years. So the associate reported a profit after tax of 30 million for the year ended 30th September 2022. So there will be an income, obvious, the parent must receive from this associate company. We will do that, and you will be able to understand what I mean when I say that there is an income the parent will receive based on the profit. But for the dividends, we would have to cancel it out. So that dividend under the parent, under the column of H, there's that investment income of 6,000. They are saying that that income was from the associate based on the dividends it received from the associate. Parent is not supposed to receive dividends from investing companies, no matter associates, joint ventures, or subsidiaries during the year. So if it received any dividends, we have to disregard. So that is why we don't record that 6,000 as an income to the parent. We have to disregard it because the parent is not supposed to be entitled to that. Is entitled to the profit at the end of the year. Number 5, as at 30th September 2022, no impairment of goodwill was considered necessary. Assume the profits and losses accrued evenly throughout the year. That is number 6. Number 7, as at 1st October 2021, the retained earnings of S Limited were shilling 16 million. They need goodwill, and they need us to compute for the consolidated statement of profit and loss. As a student, download the question based on the link attached before we start doing the computation. So down here, there's a link. So I think you have done that. So we go direct to the computation of goodwill. So when the parent will be computing the goodwill of S, based on additional information number 3, we have to use full method, where the goodwill will be attributable to parent and minority shareholders, because they said the 3 H Limited's policy to value the non-controlling interest at fair value as at the date of acquisition. So we go ahead and do the presentation. So the first thing you do is all about drawing the structure. You draw the structure and the shareholding. So remember that it was H who acquired S. It's H who acquired S. So it's H which acquired S, 80%. 80%, meaning that this is a subsidiary of the parent. So timing. So our financial year ends when? Our financial year ends 30th September. 30th September 2015. So it starts on October. So it was 2015 or 2022. It's 2022. So our financial year ends on 2022. So meaning that it starts on October 2021. The year starts on that period. The subsidiary was acquired on January. That is what we were told us at the start of the question. It was acquired on January 2022. January. So meaning that it's a 9-month subsidiary. So we can go ahead and compute for goodwill. So because what you need to know is that goodwill, it's all about purchase consideration, we minus the share of net assets, acquired, the share of net assets acquired. So here in this question, the funny thing was that, or the important thing was that, they never provided the purchase consideration in one way only, but it was in 2 ways, through cash and shares. So we need to determine purchase consideration. I need to determine purchase consideration. So as at the start of the question, they said the acquisition consideration comprised, so in terms of shares first, it comprised 3 new ordinary shares issued by H in exchange for every 5 in S. So how many shares they acquired in S? Remember that H acquired S up to 80%. So as at the start of the equation, they said H Limited acquired 80% of the 4 million shillings 10 ordinary shares of S Limited. So here we know that he acquired 80% of the 4 million. So I will say in thousands. So 4,000. So we need to know how many shares he acquired. So that one I cross multiply. So 80% of 4,000 is 3,200. 3,200 times 3 over 5. So H acquired how many shares in S? So 3,200 times 3 divide 5. We divide 5. That is 1920. So after that, 1920, we need to know the value. So meaning that ordinary share capital will be, my ordinary share capital will be 1920 times something there. So based on the question, there is somewhere they said that The power value was 10. As at the start of the question, they said on 1st January 2022, H Limited acquired 80% of 4 million shillings 10. So shillings 10. Remember that the ordinary share capital must be stated at power value, which is 10. But again, there's the third paragraph where they said, as at the date of acquisition, the fair value of the ordinary shares of H and S were 15 and 12. So if H acquired 1920, that is 1,920 shares. So if he was to sell them in the market, he was to sell at a fair value of 15. He was to sell at a fair value of 15. But the power value is 10, meaning that he was to realize an excess of 5 shillings. And that is what we call share premium. So I will come here and record share premium. 1920 times 5. So we need to get this and this. So this is 19,200. And the other one is 1920 times 5. 1920 times 5. So 9,600. So we add 19,200 plus answer. We have 28,800. 28,800. So other than through shares, there was another way the consideration was made. That is, they said that in paragraph 2, as at the start of the question, paragraph 3, sorry, they said this. Additionally, H Limited will pay further consideration on 31st December 2022. That is after 1 year, almost a year, yes, by the end of the year. 1st January, that is H Limited will pay further consideration on 31st December 2022 of shillings 11 per share acquired. H Limited's cost of capital is 10% per annum, and the discount factor is 10% for 1 year. For 1 year is 0.91. That is 0.9091. So meaning that the amount paid in the future, the further consideration paid in the future, we need to do what? So the deferred consideration. So when we talk about deferred consideration, so we need to discount that amount. So the deferred consideration must be discounted. It must be discounted to the present period. So remember that if you need to get a discount factor, you can get it, but already we were given. So getting it, we could have said that is 1 plus r raised to n. And I can see there they said 1 year. For 1 year. So we say 1 plus, the cost of capital is 0.1 raised to 1. So if we do that, we will be able to arrive at 0 point something. What they have given there. That is 1.1 raised to -1. Yes, this is which is equals to 0.9091. That is what they provided, because this is not financial management. So they had to provide so that you don't struggle. So now how do I discount this balance? The additional consideration, how is this supposed to be discounted? It's just the multiplication based on what is provided. So remember that based on the question they said, additionally, H Limited will pay further consideration on 31st December 2022 of shillings 11 per share acquired. So meaning that what we do here, I will say shillings 11 times 80% of what? 80% of 4,000 per share acquired times, so based on the equation, times the cost of capital, 0.09, that is 0.9091, sorry. So we discount because they said shillings 11 per share acquired. Per share acquired. So the 80% of the 4,000. 80% of the 4,000. So 80% of the 4,000, that is 3,200. Yes. Times 11. Times what? Times 0.9091. So that is so if I take 3,200 times 11 times 0.9091. So that is 32,000. So this is 32,000. So that is 32,000. So 32,000, that is the deferred consideration. So we add with the other consideration, which was in terms of shares, so that we get the total consideration. So 32,000 plus 28,800. So that is 6,800. 6,800. So only this one was having 2 marks before even we do the goodwill itself. So now we can be able to do the goodwill, the purchase consideration minus share of net assets. We minus the share of net assets. So we have shillings here and shillings on this other end. So we start with the purchase consideration. We start with purchase consideration. That is what I have computed there, 6,800. So the fair value of NCI, fair value of NCI, they said something about NCI. They said something about NCI. That is according to note 3. H Limited's policy is to value the non-controlling interest at fair value. But did they provide the fair value of the NCI? So for this purpose, S Limited's share price as at acquisition date, S Limited's share price, which was 12. As at the start of the equation, if you read paragraph 4, there's somewhere they said, as at the date of acquisition, the fair value of ordinary shares of H and S were 15 and 12. So meaning that the fair value of the ordinary shares of S is shillings 12. Let me embark on additional information number 3. They said for this purpose, S Limited's share price as at acquisition can be deemed to be the representative of the fair value of the shares held by the non-controlling interest. So meaning that I said other than being provided with the fair value of the NCI direct, you can be given that information which will aid in the determination of that fair value, meaning that we have been given the fair value of the ordinary shares of that subsidiary as at acquisition date. So for us to get the fair value of the NCI, we just take the percentage of the NCI, which is 20%. We multiply with the ordinary shares, which was given. The number of shares was 4,000. Then we multiply with the price. We multiply with that price, which is 12. We multiply with 12. So 20% times 4,000 times 12. So this is 9,600. That is 9,600. So then we raise the share of net assets. Share of net assets. Share of net assets acquired. So we start with ordinary share capital. Ordinary share capital. So the ordinary share capital was given, the 4,000. But now we have to make it in value by multiplying the power value of 10. So 80% and the 20% goes to the NCI of 40,000 because it's 4,000. 4,000. Remember that this is in thousands. This is in thousands. So 4,000 times 10. So this one will be 32,000. And this one will be 8,000. Then another thing, there was a revaluation reserve. That is according to number 1. The revaluation reserve. In other books, you will find that they call it a fair value uplift. A fair value uplift. So the revaluation reserve, and it has to be as at acquisition date. It was as at acquisition date based on the question given, because they said as at the date of acquisition, the fair value of S Limited is net asset approximating the carrying value, with the exemption of an item of plant, which had a fair value of 24 million above the carrying amount. So it was 24. So 80%, 20% of 24,000. Another one, which is the last one, is the retained profit. Retained profit. So retained profit is another one, which has to be as at acquisition date. So, but what was provided here is not as at acquisition date, but you can be able to get that value as at acquisition date, because we know our financial year starts on October 2021. It ends on 30th September. It ends on 30th September 2022. So the subsidiary was acquired on January 2022. So 9 months, 3 months. So as at acquisition is this period, which we call it pre-acquisition period. This is the post. So I need this period here, pre-acquisition period. That is as at acquisition. So according to the question, what is given, according to additional information number 7, they said as at 1st October 2021, the retained earnings of S. As at October 2020, as at October 2021. So October 2021 is as at the start of the year, 16,000. But we know we have the profit for the year. That is the profit after tax from the profit and loss statement. From the profit and loss statement, we have that profit of 42,000. We have that 42,000. We have that 42,000. So I can be able to get this one, 3 months. So I will just take 16 plus this one. I would apportion for the first 3 months, the 42. 3 over 12 times 42,000. So that is what I'm supposed to do. So if I pick my calculator and do that, so 42 times 3 divided by 12 plus 16,000. So this is 26,500. So 80%, 20% of 26,500 times 80%, 21,200, 26,500 times 20%, 5,300. What about this one? The revaluation reserve, 80% of 24,000, 19,200. 20%, 4,800. So we deduct from the purchase consideration and NCI fair value respectively. So 6,800 minus 32,000 minus 19,200 minus 21,200. So this is a negative of 11,600. 9,600 minus 8,000 minus 4,800 minus 5,300. So this is a negative 8,500. So this one can never be goodwill, but we call it a gain on per gain purchase. So again, bargain purchase. Again on per gain purchase. That is again on per gain purchase. So that one gives a total of, so if I add the two, I'm getting that gain on per gain purchase of 2,100. So this one would appear in the profit and loss statement as an income. This is an income. So the per gain, again on per gain purchase. So we are done with the first part of that question. That is 4 marks. So we do another 8 marks where they needed a consolidated statement of profit and loss in the shortest time possible. So if we do that, so remember that when doing the income statement, the first thing you do, you draw the structure, then check the time. Remember, like now here S is a 9 months, S is a 9 months subsidiary. That is what we have confirmed because it was existing from January to the end of the year. So when consolidating this subsidiary as H, so remember that the parent is the one which consolidates the subsidiary. So H Limited, they need consolidated statement of profit and loss. So the consolidated statement of profit and loss. So that is for the year. For the year ended. So our financial was ending 30th September 2022. So here, we start from the revenue. So we add the parent plus subsidiary, but the subsidiary we only consider it for 9 months. So revenue for the parent is 546,000 plus 9/12 times for 20,000. The only thing you deduct under revenue is only the intergroup sale which occurred between the parent and the subsidiary. So if there is any goods which they sold to each other, you eliminate that. There were sales which occurred, that is according to note 2 from S to H, at a price of 30 million. So that is what I deduct here. So shillings here is thousands. So for the computations, I will do later. Let's first record what is required to be recorded. So we go to the cost of sales. So for the cost of sales, we talk about parent plus subsidiary. So this 300,000. So we minus the intergroup sales. We add the UPS. Intergroup sales is the same one. We minus under the revenue. So we minus the UPS. UPS is all about unsold goods times profit margin. So remember that when these goods were sold, that is from S to H. H remained with a fifth of the goods by the end of the year. So meaning that based on the unsold goods, that is where we get the unrealized profit on stock, the UPS. So a fifth of the 30,000 times profit margin. So remember that when S was selling the goods to H, that is according to note 2, he made a profit margin of 25%. That is a quarter. That is a quarter. So if I use my calculator here, I just take 30,000, I divide the 20. So this is 1,500. So that is what we add here. So another thing you consider is all about depreciation under charge, which is added. If there was a depreciation overcharge, we subtract, but there is no depreciation overcharge. Depreciation overcharge can only arise when there is a sale of fixed assets, whereby first you have to compute for unrealized profit on fixed assets, then you go ahead to compute depreciation overcharge. But for the depreciation undercharge, it was present. That is based on revaluation gain of note 1 of 24,000. So revaluation gain divided by the useful life, 6 years. But remember that S was not present for the entire year. It was existing for 9 months. So our depreciation undercharge will be 24,000, which is a revaluation gain, divide the years, the remaining useful life of 6, times the period 9/12. So that is 3,000. That is the only thing. Again, we do what? We add here. So we are done with the cost of sales based on this question. Based on our question here, we are done with the cost of sales. So we go to the, so once you take the cost of sales, obviously you minus from the revenue. So you minus the cost of sales from revenue, you get a gross profit. A gross profit. Then after that, I can see there's distribution costs. So distribution cost is just 36,000 and 24,000. 36,000 plus 9/12 times 24,000. After that, we have administrative expenses. So the admin expenses. So for the administrative expenses, 42,000 plus 9/12 times what? 28,000 times 28,000. So after that, we get the profit from operations. So after profit from operations, there was investment income of 6,000. But what did I mention? According to note 4, they said H Limited, this investment income is dividend received from investment in a 40% owned associate, which it had held for several years. The associate reported a profit after tax of 30 million for the year ended 30th September 2022. So meaning that that 6,000 was just a dividend received from the associate, and we don't have to record those dividends. The parent doesn't have to recognize that. You can only recognize dividends from third parties, not investing companies, like associates, joint ventures, or subsidiaries. So meaning that the only thing the parent will be entitled to from the associate company is just a profit of the share he hold in that associate. Like now here, the associate made a profit of 30 million. The parent is supposed to take his share of 40%. So we come here and say share of profit after tax in associate. So that this associate was a 40% owned associate, so 40% of 30,000. So that is the profit the parent will be entitled from that associate as an income. As an income. So after this, based on my question, what I can see next there is the finance cost. The finance cost. That is what I can see next. So for the finance cost, parent plus subsidiary, so that is 4,000 plus 9/12 times 9/12 times. It was under the subsidiary, it was 2,000. But here we need to add something. Remember that there was that consideration which was paid in the future, the one which we discounted by doing this. So under these consideration, what they said is this. In that question, what they said is this. In that question, they said that is paragraph 3, as at the start of the question. Additionally, H will pay further consideration on 31st December 2022 of shillings 11 per share acquired. H limited cost of capital is 10% per annum, and the discount factor. So the cost of capital is 10% per annum, and the discount factor as at the discount factor at 10%. At 10%. So based on that, there's something we need to consider called unwound discount. Unwound discount. So the unwound discount on a deferred consideration, which must be added here on deferred consideration, which must be debited to the income statement. That is debit, P&L. That is finance cost. We credit what? Deferred consideration. We credit deferred consideration, which is a current liability. How will we do this? Based on the information provided, you just take 10%. 10% times what? Based on my question, times 32,000, because that is where is 32,000 coming from? Because it's 34,000 times 10 times the 80%, what was acquired from the subsidiary company. Then we multiply for the months, 9/12. So that is what you debit income statement. You credit deferred consideration as a liability. So 10%, that is 0.01. That is 0.1, sorry. 0.1 times 32,000 times 9/12. So I will be able to add 2,400. I will be able to add 2,400. And we continue with the others. We continue with the other items. So remember that other than all the other items I've recorded, before I subtract tax, I need to introduce that gain on what? A gain purchase. When we were doing Goodwill, we arrived at a gain on per gain purchase of 2,100. I said it's an income. So we say profit before tax. So we talk about income tax. So the income tax is all about income tax expense. Income tax expense 30,000 and 24,000. 30,000 plus 9/12 times 24,000. So profit for the year. So we'll be able to get that one. So then after getting profit for the year, remember that we have to say profit attributable to NCI. Because what we have been doing here, we have been adding parent and subsidiaries without considering the 80% and the 20. So there must be profit attributable to NCI based on the profit after tax of the subsidiary. So that the balance from the profit for the year, after deducting the profit attributable to the NCI, goes to the parent. So for the profit attributable to the NCI, we have to do our working. So we say profit attributable to NCI This is our working I'm doing. So we say profit after tax of S. So which is 9 over 12 times 42,000. So this profit must be adjusted. So 9 over 12 times 42,000. This is 31,500. So this profit must be adjusted by considering if there is UPS based on sales upstream, less other than UPS on sales upstream, because if there was a sales upstream which was present, by the way, S sold goods to H. So meaning that H never realized all the profit based on the goods unsold by the end of the year. And the goods were, I think, a fifth. That is why we arrived at this. This UPS. This profit is overstated in S, which was never realized by H, because the sales was this way. So this one realized the total profit, but there is 15 unrealized here. So this profit is overstated here. So we need to minus. If there is depreciation under charge, meaning that if you did that under charge, the profit was overstated. So we minus the 3,000. If there was overcharge, you add back because you understated your profit. There was none. And if there is impairment, we rest. There was no impairment. Impairment loss was not there because there was no even goodwill. We arrived at again on per gain purchase. Again on per gain purchase. So if you do the computation, that 1,500 minus 1,500 minus 3,000, I'll be able to get 27,000. So this is the adjusted profit. So 20% of that, 20% of 27,000 is 5,400. So it's 5,400. So there was a calculator error. So man is prone to error. Nobody is 100% perfect in this life. So let's add so that we get the final answers. And that is what they mark. Other than doing this, remember that you have to do those entries. Like now, the first one is all about 800 and what? 831,000. What about the cost of sales? So if I take 378,000 plus 9 over 12 times 300,000 minus 30,000 plus 1,500 plus 3,000. This is 577,300. So 831,000 minus answer. This is 253,500. 9 over 12 times 24,000 plus 36,000. This is 54,000. This is 63. Uh, 253,500 minus 54,000 minus 63,000. So this is 136,500. That is profit from operations. 40% of 30,000. This is 12. This is 12,000. That is 12,000. Then 9 over 12 times 2,000 plus 4,000 plus 2,400. 79. This one you deduct, this one you add. So 136,500. 136,500 plus 12,000 minus 79 plus 2,100. So this is 160,700. 9 over 12 times 24,000 plus 30,000. 48,000. So 160,700 minus answer. So this is 112,700. So for the profit attributable to the parent, if I take 112,700 minus 5,400, so minus 5,400. So this is 107,300. So that is it. That is it. That is how you are supposed to do this question. It was having 8 marks. The goodwill was 4. Then this one was 8. So 12. So this one, they never needed a lot of entries. They needed 4. For the 8 marks, they just needed 4. We have many which were direct. Like now, here, how many entries are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So they never needed even 8 to get 8 marks. They only needed 4 correct entries. They multiply by 2. You get your 8 marks. That is why I'm saying there are some which are direct. Like now, distribution cost, admin cost, we have income tax. Understanding about revenue is only you deduct intergroup sales. So even if you could have recorded only those 4, you have your 8 marks. And for the goodwill, 4 marks at least. Under the determination of purchase consideration, you could have scored those 2. So in the computation of the purchase consideration we did, so the purchase consideration was having 2 marks. Then the other part of that goodwill 2 marks, you get 4. So my next question I will be able to do will be on the live class based on this session. Based on the starting session, sorry. I said that my live classes, the live classes for financial reporting and advanced financial reporting and even other units, because I work with our team, we will be starting our new semester coming 3rd of January. That is on Tuesday. So that is when the semester starts. So feel free to contact me through my number 0728 760 546. For the guys who are in Rwanda, I know you listen, I know you follow. Rwanda, we have my followers from Nigeria, Sudan, South Sudan, and all other countries. So this is my number if you need to join my class. Not if you need to join, you can't go long. So this is CPA Edwin. So let us start the semester earlier so that we can be able to conquer this animal called CPA and you finish and do other things. Again, I need to thank God for the gift of life for the year 2022. We have achieved a lot in this year. The 3 semesters, we did wonders. In this channel, we were able to grow at a higher speed. So I expect more to follow in 2023. And if you have not subscribed, that is now where you have to click the subscription button and open the notification bell, because sometimes when I post relevant information based on what I do, you can be able to be notified. Take a minute to say thank you to God for what He has done to you this year. Happy New Year. Welcome to the classes starting this week so that we can do more. Amen.